You know that sinking feeling when you check your bank account and realize your savings have been sitting there for years, barely growing, while everything around you gets more expensive. Meanwhile, you keep hearing about Bitcoin making millionaires, but every time you consider looking into it, your bank sends you warnings about how dangerous it is. Here is something nobody's telling you. While banks publicly trash Bitcoin, they've been quietly manipulating its price to buy low and sell high. And regular people like us are the ones paying for it. Hey everyone, I am James, and I've spent years researching personal finance and how the traditional banking system really works behind the curtain. I share practical insights that help everyday people break free from financial traps that keep us stuck. If you are tired of feeling like the system is rigged against you, you are going to want to stick around for this. Please don't forget to subscribe and hit that like button, because I'll be sharing more eye-opening content that could change how you think about money. Let me introduce you to a concept I call financial gatekeeping. This is when institutions that control access to wealth-building tools deliberately create fear, confusion, or barriers to keep ordinary people away from opportunities while they quietly profit from those same opportunities. The core value here is simple. Once you understand this pattern, you can stop being manipulated and start making informed decisions about your financial future. This solves a massive problem for people like you and me who work hard but feel like we're always one step behind those who seem to know something we don't. Let me show you exactly how this plays out with Bitcoin. In 2021, JPMorgan Chase's CEO publicly called Bitcoin worthless and said he'd fire any trader dealing with it. That same year, his bank launched a Bitcoin fund for wealthy clients with account minimums of $5 million. Think about that for a second. They tell regular customers to stay away while offering it exclusively to rich clients. This is textbook financial gatekeeping. Here is another example. In early 2020, Bitcoin was trading around $7,000. Major banks issued reports warning about a crash, calling it a bubble ready to burst. What happened next? Bitcoin dropped to around $4,000 during the March panic. But here's the twist. Blockchain data showed massive institutional purchases during that exact period. By December 2020, Bitcoin hit $29,000. Those institutions made over 600% returns, while scared retail investors sold at losses. The banks didn't just predict the crash. They helped create it through coordinated negative messaging, bought the dip, then rode the wave up. Let's look at a real person scenario. Sarah is a marketing manager making $60,000 a year. In 2019, she had $3,000 saved and considered putting $500 into Bitcoin when it was around $8,000. Her bank advisor told her it was too risky and suggested a savings account earning 0.5% interest instead. She listened. That $500 in the savings account grew to about $512 over 3 years. If she'd bought Bitcoin, even with its volatility, that $500 would have been worth over $3,000. By late 2021, the difference? $2,400 in potential gains lost because she trusted institutional advice designed to keep her money. In their low-yield products, compare that to Marcus, who works in finance and has access to wealth management services. His advisor never mentioned Bitcoin being dangerous. Instead, in 2020, his portfolio automatically allocated 10% to cryptocurrency-related investments through institutional channels. His $50,000 investment portion grew significantly, while people like Sarah were being told to stay away. Same asset, different messaging based on wealth level. That is financial gatekeeping in action. Here is the manipulation mechanism banks use. They have 3 powerful tools: media influence, regulatory lobbying, and market-moving capital. When banks want to accumulate Bitcoin cheaply, they flood mainstream media with fear stories, regulatory concerns, environmental damage, fraud risks. This creates panic selling among regular investors, prices drop. Then, institutional money quietly enters through over-the-counter trades that don't show up on public exchanges. Once they've accumulated enough, the narrative shifts. Suddenly, you see stories about institutional adoption, Bitcoin as digital gold, major companies adding it to balance sheets. Prices rise. They sell portions for profit. Then the cycle repeats. The numbers prove this pattern. Research from Arcane Research showed that in 2022, during every major Bitcoin price drop, institutional wallet addresses increased their holdings by an average of 12% within 2 weeks of the bottom. Meanwhile, retail wallet addresses decreased holdings by 18% during the same periods. Regular people sold low out of fear, while institutions bought low with confidence. Over a 12-month period, this pattern repeated 7 times. That is not coincidence, that is strategy. Now I know what you are thinking. First objection, James. I don't have enough money to play these games with Bitcoin. I am just trying to pay my bills. Here is the thing. You don't need thousands of dollars. And I am not saying you should dump your savings into cryptocurrency. Understanding financial gatekeeping isn't about becoming a crypto trader. It is about recognizing when you are being manipulated away from opportunities. Even putting $20 a month into Bitcoin during the fear periods instead of panic avoiding it entirely would have built meaningful value. Over 3 years, the point is awareness, not massive investment. When you see coordinated fear campaigns, ask yourself who benefits from you staying away. Second objection. What about the real risks? Bitcoin is volatile and people do lose money. Absolutely true. But here is what matters. Banks aren't warning you about volatility out of kindness. They warn you about Bitcoin volatility while charging you $35 overdraft fees and offering savings accounts that lose value to inflation. A savings account earning 0.5% while inflation runs at 7% means you are losing 6.5% purchasing power annually. That is guaranteed loss. But they never frame it that way. They frame Bitcoin as risky and savings accounts as safe. When both have different types of risk, financial gatekeeping means showing you only the risks that keep you in their profitable products. Third, concern. This sounds like conspiracy theory stuff. Is it really coordinated manipulation? Look at the evidence without emotion. In 2017, Goldman Sachs called Bitcoin a fraud. In 2021, they launched a Bitcoin trading desk. In 2018, Bank of America banned customers from buying Bitcoin with credit cards, calling it too risky. In 2021, they filed patents for cryptocurrency storage systems. Morgan Stanley, Wells Fargo, Citibank all followed the same pattern. Public discouragement for regular customers, private adoption for wealthy clients and their own operations. When every major institution does the same thing at the same time, that is not conspiracy. That is coordinated business strategy. So what can you actually do about this right now? Here are 5 concrete steps that cost little to nothing but shift the power dynamic. First, diversify where you get financial information. Stop relying only on your bank's advice or mainstream financial news that gets advertising money from banks. Spend 30 minutes weekly reading independent financial analysis. Look at what institutional investors are actually doing with their money, not what they're telling you to do. Actions speak louder than press releases. Second, set up a small automatic investment system outside traditional banking products. This could be $20 to $50 monthly into a low-cost index fund, a tiny Bitcoin position through a reputable exchange, or even a high-yield online savings account that pays 20 times more than your regular bank. The amount doesn't matter as much as breaking the psychological dependence on traditional banking as your only wealth-building tool. You are training yourself to think independently. Third, track the fear cycle. Keep a simple note on your phone. When you see multiple scary headlines about any investment category over a 2-week period, write it down with the date and current price. Check back in 6 months. You'll start seeing the pattern where coordinated fear often marks the bottom before institutional buying pushes prices up. This isn't about timing the market perfectly. It is about not selling in panic when others want you to. Fourth, calculate the real cost of convenience. Add up what your bank charged you last year in fees, overdrafts, low interest on savings, and opportunity cost. That savings account earning almost nothing while inflation runs hot. That is a hidden fee. Those convenient overdraft protections at $35 each? That is a manipulation tax on being broke. Most people discover they're paying $300 to $800 annually to stay in the traditional banking comfort zone. Seeing the real number motivates change. Fifth, start a learning fund. Take 10% of what you are losing to bank fees and hidden costs. Put it toward financial education. A $20 book about how institutional investing works teaches you the game they don't want you to understand. A $30 online course about basic cryptocurrency mechanics removes the fear of the unknown. Knowledge is the ultimate tool against financial gatekeeping. They profit from your confusion and fear. Education destroys both. Here is the bigger truth. Nobody wants you to realize. The financial system isn't designed to make you wealthy. It is designed to keep you stable enough to keep working and spending, but not informed enough to build real wealth. Banks need your deposits to lend out at higher rates. They need you in high-fee products. They need you scared of alternatives. Your financial mediocrity is their business model. Bitcoin is just one example. The same gatekeeping happens with real estate investment trusts, peer-to-peer lending, tax-advantaged accounts, and dozens of other wealth-building tools that get complicated or scary-sounding names to keep regular people away. When banks found the loophole to manipulate Bitcoin prices, they didn't break any laws. They used legal tools like coordinated messaging, regulatory influence, and capital deployment timing. The loophole isn't in the law. It is in the information asymmetry between them and you. They know you'll react emotionally to fear. They know you'll trust institutional authority. They know you'll sell low and buy high because you are acting on feelings while they're acting on strategy. But here is your advantage. Once you see the pattern, you can't unsee it. Once you understand financial gatekeeping, you start noticing it everywhere. That credit card offer that seems generous but has hidden terms that cost you later. That investment product your bank pushes hard because they earn high commissions. That fear-based news story that comes out right before institutional buying periods. You become immune to manipulation when you understand the game. This isn't about becoming a Bitcoin expert or day trader. This is about taking back control of your financial decisions from institutions that profit from your fear and confusion. Every time you make a choice based on your own research instead of their convenient advice, you break the gatekeeping cycle. Every time you put even a small amount into something they told you to avoid, you are betting on yourself instead of their profit margins. The path to financial freedom isn't about finding some secret get-rich-quick scheme. It is about recognizing and avoiding the traps designed to keep you financially dependent. It is about understanding that the same people warning you away from opportunities are quietly taking those opportunities themselves. It is about realizing that your bank advisor making $45,000 a year is reading from scripts written by people making millions who play by completely different rules. You deserve to know these rules. You deserve to understand how the game actually works. You deserve access to the same information that wealthy people get from their private advisors. That is what I am here to share with you. Not just about Bitcoin, but about every aspect of personal finance where institutions profit from keeping you in the dark. If this opened your eyes to something you hadn't considered before, do me a favor. Hit that like button so more people can see this message. Subscribe because I'll keep breaking down these hidden systems that cost you money. Share this with someone who is frustrated with their financial situation and doesn't understand why working hard isn't enough anymore. The system counts on us staying isolated and uninformed. When we share knowledge, we break their most powerful tool, our ignorance. You are not broke because you are bad with money. You are not struggling because you don't work hard enough. You are facing an uphill battle because the system is designed to extract wealth from people like us and concentrate it at the top. But knowledge changes everything. Action changes everything. You now know something most people don't about how financial gatekeeping works. The question is, what will you do with that knowledge? Because I promise you, understanding this one concept and acting on it will do more for your financial future than another decade of following conventional banking advice ever will.